Hello there everyone, today's video we're going to talk about what I would suggest is a very little well-known tax relief called Land Remediation Relief. And I would suggest not many people have heard about this at all, but you could benefit from this if it is applicable. When is it applicable? Well, I'm going to tell you. So the clue is kind of in the title, Land Remediation Relief. Basically, when you acquire some land or a building with, some land and buildings, or just the land, and it's not in a fit state for use at the point at which you buy it. In other words, you got to spend a load of money getting it safe, for human habitation, for humans to work there, or even for wildlife as well, because it has been previously polluted. Let's say there was an industrial unit there before, they've left it in a bit of a mess in terms of what's on the ground and the soil, everything else. You've got to clean up the land. There is tax relief for doing so, all right? Now, this tax relief only applies if you're a company. So you're a company acquiring this land. It doesn't apply to partnerships or sole traders. So just a corporation tax relief. Now, so companies acquire, dispose land. So basically, the money that you spend on putting the land into a proper state so that you can put a new lightweight commercial unit, not heavy industrial on, or whatever you're going to do with it, that money that you spend can either be what we call capital or revenue expenditure, depending on if it's the nature of the expenditure. But HMRC said, look, doesn't matter if it's capital or if it's revenue, if it's on your balance sheet or if it's your profit and loss account, whatever you've spent on fixing this land, we're going to give you 150% relief. So what does that mean? Well, it means that assuming that you would have had 100% relief in any case, you'd have had tax relief on all of that stuff, you're getting another 50%. So HMRC are saying, look, assume that you spent 1.5 times what you did cleaning up that site, and we'll give you tax relief thereon. All right? So there is also in these rules, part of the rules say that, look, it doesn't just apply to the condition and the state of the land when you acquired it. You can also claim for cleaning up after you've bought it. In what circumstances? Well, this one is a biggie. Japanese knotweed. So let's say you've acquired the site and it's several years down the line, you've built your premises that you're trading out of, whatever you're doing, and someone comes and does some fly tipping right on your site, and it results in a swarm of Japanese knotweed occurring due to the fly tipping. That's happened several years after you've acquired it, so it wasn't a condition of the land at the time that you bought it, but nevertheless, the rules say that you can also claim for clearing up this Japanese knotweed, which is lethal, and some other bits and pieces as well that they've added to the rules. So it's not all about the state and the cleanup at the time of purchase, but mostly that's what people would claim it on. So HMRC said, look, it's the preparation work for doing like a feasibility study. You commission a surveyor to say, look, tell me how bad the problem is. That all counts as a cost of cleaning it up, and then the actual cost of cleanup itself. And then you add all these together and you say, right, times by 150%. So 150%, let's just take an example, right? So we've got just made all this up. So you've got a $5,000 cost to a professional to do a feasibility study, surveyor or whoever. They say, yeah, you've got a problem and it's going to cost you $95,000 to fix. Oh, okay. So of that $95,000 plus the $5,000 for the surveyor's fee, $60,000 of the cleanup cost you decided from an accounts point of view was going to be capitalized, go on the balance sheet, and the remainder $35,000 you treat as a revenue expenditure, put it through the profit and loss. Now HMRC say, look, I don't care if you're putting some of it to the balance sheet, you can claim this 150% relief on the whole lot. So $100,000 spend, including the prep work. HMRC say, assume you'd shelled out $150,000 instead of $100,000, so i.e. 150%. So $150,000 comes off your taxable profits instead of $100,000. Now, assume as well that the capital expenditure, you might have got capital allowances for that in any case. So the increase the increase in the tax relief resulting from having this claim for land remediation relief is an extra 50,000 of tax deduction. Assume it's a 25% tax rate. That's an actual cash saving, tax saving of £12,500. Now, this company directors might not have even known about all this. They just acquired this site, said, yeah, it's in a bit of a mess. There was a former quarry on there, or goodness knows what, a chemical plant, and we had to clean it up. They might not have known about this. So if you're in this situation, for goodness sake, you think about it. Have you acquired some land where you had to do a bit of cleanup before you could put it to further use for your business? Or have you been suffering from Japanese knotweed since you bought this, or other things as well? There's some pollutants that have happened naturally. You could be entitled to claim land remediation relief. So food for thought there. An extra 50% deduction, not to be sneezed at. So, overview on land remediation relief. If you like this video, please do subscribe. And as always, I'll see you soon.